Hey, I'm Marc Cunningham at Grace Property Management here in Denver. We get calls almost daily from current real estate investors and owners who say something like this. I've been managing this property myself and it's vacant right now and I'm having trouble getting it rented. So maybe I should work with you guys at Grace Management to help me rent my property because I just can't find a tenant. Can you help me with that? And of course, that's what we do. But we explain to those owners, and I want to explain to you the 5 steps, the 5 necessary elements of what you need to do when you have a property that's hard to rent, either because the property is just a hard to rent property, or maybe market demand is slowing, which is what we're seeing right now. We're seeing demand slow down in the Denver rental market. So there's 5 steps, 5 check boxes you need to make sure you put your property through in order to ensure the likelihood of it getting rented quickly and to a quality tenant. Now, before we say that, the first thing you need to understand is this, because this owner I was talking to said this: hey Mark, the mortgage I have in this property is $3,000 a month. So I need to make sure I get at least $3,000 in rent because I have to cover my mortgage payment. And then I very gently said, well, I understand the mentality there. However, the market doesn't really care and your tenant doesn't really care what your mortgage payment is. If the market rent on the property is $2,500 a month, it doesn't matter that your mortgage payment is $3,000. We can't just charge more in rent because your mortgage payment is higher. Those two things are completely different from each other, and there's no tie over that way. So we just need to understand that as a real estate investor, it doesn't matter what your mortgage payment is when it comes to setting the rental rate on the property. So what are the 5 things you need to do, the 5 check boxes you need to make sure that you're checking off in order to get your property rented? Number 1, the property must show well. More so than in the past because demand for rental properties is declining. That means your property must be clean and it must be updated. The carpet has to be cleaned and it has to be fresh and smell really good. The walls need to have a fresh coat of paint. The appliances need to shine. The front door should have a fresh coat of paint. When you walk up to the front door, the little flower beds should be clean and picked up and look really inviting. Why? Because properties have to show well and they have to be clean, or they're just not going to get attraction and interest from potential tenants because they have too many other properties to choose from. Now, once you check that box, a clean property won't rent itself. You need to make sure that your marketing is comprehensive. You're pushing the property out to the maximum number of sites that advertise properties. A lot of those are paid sites, meaning you as the landlord, as the property owner, need to pay money to put your property on these sites that a lot of people are going to. Zillow has a premium listing package. You should be utilizing that. It costs you money, costs us money, but that's what you should be doing to ensure that the property is being marketed and pushed out. Your photos need to be professional. They need to look really, really good and be sharp. They need to be accurate. You should have a video walkthrough tour of the property as well. All of that should live online so people can get a true sense of the property. Your description should be accurate. All of those things are part of the marketing of the property. Now, if you're doing that and it's not working, sometimes we'll have to say to owner clients, well, it's not the marketing, it's the market, which takes us to number 3. Sometimes we have to offer a move-in incentive. The property looks good, the marketing is in place, let's try offering a move-in incentive. Maybe that means you offer a couple $100 off the first month's rent or half off the first month's rent. We've seen in different markets when things ebb and flow, property management companies will offer the first month rent free. Sometimes big apartment complexes will reduce the security deposit down to $99, down to $0. Sometimes it'll be the last month rent free. There's all sorts of different things you can offer as far as a move-in incentive. What we find is most effective is having a dollar amount off that first month's rent. Use a dollar amount, not a percentage. It's just easier for people to see, to understand that, oh, I get $500 off my first month's rent when I move into that property. So that's something that helps attract individuals looking to rent a property. If that's not working, number 4, you need to look at reducing the rental rate. And sometimes this is hard to do, especially if you were getting a higher rental rate before and owner clients don't understand, well, gosh, I was getting $2,500 a month before the tenant moved out and now I can't even get the same rental rate. In some segments of the Colorado rental market, that's correct. Some segments of our market, we're seeing rents flatten and even decline on some properties. Why? Because demand is diminished and supply of rental properties has increased on the multifamily space. So if you've got a condo, townhome, your rental rate may be less than it was 12 months ago. And same thing on some of these higher end homes, we're seeing that as well. The last thing is to review your scoring criteria, meaning if over the course of the last 12 months, you've increased your scoring criteria. You said, you know what, I'm going to require a minimum credit score of 650 now. And a few months later, a year ago or 2 years ago, you said, I'm taking it to 675. Well, maybe you raised the bar too high. Now it's a fine line to walk, because what you don't want, and what we don't want as a property management company, is for a property to go from our vacancy listing to our delinquency listing because we placed a tenant who doesn't have the ability to pay their rent on time, and now it's no longer vacant, but now the tenant hasn't paid rent. We don't want that. So we want to keep the bar appropriately set when it comes to scoring criteria. Now in Colorado, this has been very, very measured in that the government has redefined what a lot of the scoring criteria already can be for us. For example, if it's a subsidized tenant, it is illegal for us to even pull their credit score. We can't even consider credit score on a subsidized tenant. You say, well, Mark, just don't rent to subsidized tenants. We're required by law to rent to subsidized tenants, so that's not an option there. We are required by law that we cannot require income beyond 2 times the amount of the rental rate. So that artificially pushes the bar a little bit lower, because before that we would say, hey, we want to see your income at least 2.5 times the amount of the rent in order to qualify. Well, the law says, nope, you cannot require more than 2 times. So that's bars. Some of those things are set by the legislature. Other things we do have some say in, but you want to make sure you're adjusting that bar accordingly and appropriately to allow quality tenants into your property to view this. We have a very intricate and very time-tested scoring criteria for us. We've scored over 30,000 applicants since we've been in business since 1978. 30,000 applicants. We know what to look for on tenants coming in. It doesn't mean every tenant's going to be a pristine tenant and always pay right on time, but we've done it many, many times. Our rent collection rate is over 99% on a monthly basis, meaning we do a good job of screening quality tenants on the front end, working with tenants to ensure that they pay their rent on time while they're here. But you need to look at these 5 things. Now, 2 things we're seeing in the rental market, specifically in Denver, and that is we're seeing renter demand slow down. Some of that is because less people are moving to Colorado. Some of that is because supply is increasing, but we are seeing renter demand overall slow down. And the market is becoming much more segmented. When markets slow down, they don't all just suddenly drop 1%, 2%, 3%. That's not the way it works. What typically works is they slow down in a very segmented way. So what we're seeing are condos, townhomes, multifamily properties are dropping pretty precipitously. They're dropping fast. The demand is dropping. Rents are dropping. And it's not falling off the side of a cliff, but they might go for 5%, 6%, 7% less than it went for even a year ago. We're not seeing that in all single-family homes. Demand is stable for single-family, so that's different. Single-family demand is up, single-family rents are up, multifamily demand and rents are flat and even declining. High-end executive homes, we're seeing those start to decline. Those rents are coming down a little bit. So the market is becoming more and more segmented, which on one level, when you're trying to view the macro, doesn't make a lot of sense. But when you understand that the market declines in segmented ups and downs as it drops a little bit, that's just the way it works. Now, big picture, we view that we're getting back to more of a market in equilibrium. We've had 10 years of extraordinarily high rental rate increases. This is simply the pendulum swinging a little bit back towards normal and rental rates establishing themselves where they should be. Now, next month, we'll talk about costs of ownership and how you can expect things like taxes and maintenance and other costs to go up pretty significantly, which is not the best news as a landlord. But those are some things that you can be doing to ensure your property is rented as quickly as possible in this current market. If you're a real estate investor and we can be a resource, jump on our website, rentgrace.com. We're happy to prepare a rental analysis to let you know what your property could rent for and be a resource if you need us. Until then, whether you're a resident, whether you're a landlord in Colorado, we wish you success.